midweek stock market update. And I knew I would regret this midway through the year, which is not putting all my money in Microsoft and Apple and Amazon. But I just didn't want to have that level of concentration in those stocks. But let's have a look at the stocks and how they've been doing. And it's been a great week, which has surprised me somewhat. I expected more of a pullback and was afraid of more of a pullback, but that hasn't come along, which has been good news. Valuations, these are price earnings ratios, share prices relative to the profits of a company. Red means the share price is quite high for the amount of profits the company's generating, other than oil and banks. Again, everything looks expensive. Performance has been rather good for right across the board. And that's a bit of a relief for many people, many of the analysts who didn't like the fact that it was only the Nvidias which were dragging the market up and the Apples and the Amazons. In actual fact, you can see here that actually it's everything from semiconductors to, look at that, farm, insurance. Tesla, of course, has resumed back. We're going to look at all of these in just a second. Another measure of valuation is share price to earnings growth or growth in profits. And again, everything looks overpriced. Look at that. The NASDAQ is now up 36%. If you just track that, and it's a good proxy for our pensions, your pension would be up 36% this year. Okay, if you were just tracking the NASDAQ. The S&P would give you a 13% rise. The UK market's up 7%. All right, phenomenal. Those people, and there's been a couple of them who said, oh no, after last year I'm staying out of the markets. Well, you've just missed out, and this is the whole point. You've missed out massively and pretty much screwed yourself over. That's the S&P 500. January is when really the turning point came, just as it came last January as well. Last year was down. Now, you can see that upward trend. That upward trend is intact. The market's really escaping and clambering ahead. I'm going to be on the BBC on Thursday morning talking about the markets and interest rates. And we could go into the reasons why it's moving ahead, but let's just look at some of the more technical, practical issues, which is the monthly MACD and momentum is flat, as I've been saying for months. And it's going to rise, as is the weekly there, as is the stochastic, which is a bit more premature. Monthly and weekly is looking good. So I expect that to continue. Do not be surprised if there's a bit of a pullback and profit taking. And if there is, that's fine. I can deal with it. Let's turn to specific individual stocks. FTSE still looks overbought, more likely to fall. Don't forget alpeshpatel.com/links and subscribe, like, share. So let's go into Apple. Well, it's on track. It actually had a wobble recently. It fell a little bit, not much, fell a little bit. And I actually thought, oh, that's it then. We're going to get a pullback, and maybe that pullback could be as far as this bottom trend line, but it's not happening. We're still getting things rallying ahead, and let's just keep a close eye on it. For those who said, no, well, you're missing out on, what is that, almost a 50% gain. So you'll eventually be right, just you'll be poorer as well for those who stayed out of it and sidestepped it. The average Apple price is now at where, on average, the analysts think it should be. However, the highest analysts' view on this is that it will be at 220, and I think they're right. So what this chart shows, I'm going to show you for other stocks as well, is the average analyst viewpoint, the current share price, and the upside. And this return potential shows where the kind of return you'd get if it hit that average analyst share price target. Now, it doesn't mean the analysts are right. I'm just sharing that for you. And this tells you all the banks and what they think. So this is Alphabet. Still hold it. Like I said, I wish I'd bought more. But I said that to those of you who are my clients on the Great Investments Program. You'll know I said that in January. I said, I know what's going to happen. By about June, I'm going to regret not just having absolutely everything in these alone. But that's how it is. I made that conscious decision not to be super concentrated. Average, you can see the figures. Google's at 124. The average analyst thinks 131. High 160. Microsoft, similar. It's in that really narrow, steep rise, which is great. It could easily pull back, but the pullback shouldn't be too much. So, and you can see all the banks are saying buy. There's going to be a flood of money. The monthly MACD has a long way to go before it's overbought, and it'll probably happen with still another 20-30% to the upside in gains. Okay, so that's what the analysts think. Amazon, look at that skyrocketing ahead. That is not going to be overbought. In other words, that MACD is not going to be overbought until that goes from 126 to closer to about 180. So another 50% rise in Amazon, which could happen in the next 6 to 12 months. Okay. And you can see some of the analysts actually believe that that's going to be the case for that one as well. And I'm probably after this call go and buy some more of all of these. Disney, why have I got Disney? Well, I wanted to have something other than the obvious tech ones, and it's a relatively safe company. That's the direction. That's what the other banks think. Not much since the end of the week update on that one to give you. Nvidia shooting ahead. Of course, the argument now is you really should start taking some profits if you're risk averse. If you're risk loving, you might even double down. But most people will probably be risk neutral on this, given how much it's risen, and be afraid that it could pull back. And so they'll probably say, well, I'll sell 10% if it drops 10%, I'll sell 20% if it drops 20%, and so on. And they'll work that out for their own risk appetite on that one without getting too greedy. You can see what that company thinks. And obviously a lot of people are talking about, well, wait a minute, what other tech companies are there that we've missed, which Nvidia could compete with, or could compete with Nvidia, that we should get into. And I'll do that on my Telegram channel. Have a look at that. Have a look at my Great Investments program. If you're not part of it, your pension's suffering. So you see that dotted line there, that's likely to go up, and Tesla really is escaping away. And that will hit an all-time high this year. Okay, so much more upside on Tesla as well. So I'm really pleased with all of these in my pension, and I need to top up my son's purchases. Actually, I've noticed. I was looking at that yesterday, and look at the V-shaped recovery on Meta. I actually want PayPal to do that, but that's where that is, and that's going to continue because they have pivoted to AI, and they should have done. And you can see the rise up there. And I get a lot of people, some people go, well, yeah, AI is overborn, it's a bubble. Well, thank you very much. That bubble's just given me 100% return. Thank you very much for the bubble. What's your problem? There we go. And those are the analyst figures, and you can see some upside there as well. And Chipotle I've spoken about before, and there's the angle, all looking fine. All right, ServiceNow, similarly, happy with that and happy with where these are positioned. Don't forget to have a look at that campaign for $1million.com. Don't forget to have a look at all of these things. Join me on Telegram to get more updates, and subscribe on YouTube. Otherwise, you may well miss these. Have a look at alpeshpatel.com/links as well. Thank you.